Hello everyone, welcome to the Trendline Investor channel. In this video, we're going to look at two stocks from the pharma sector, which has not been doing pretty well. In fact, the pharma sector was one of the best performing sectors just after the COVID crash. And then since then, just in the last one and a half years, the sector itself has been underperforming Nifty and has been just going sideways, while many stocks have corrected significantly. So we're going to look at two stocks from the pharma sector today in this video, and I'm going to tell you why they are my favorite stocks at this point, especially given that they are in the edge of the parallel channel, which means they have some really good potential to head higher from here. Okay, so if you haven't liked this video, I'd recommend you like this video and let that algo work and make its magic, so that this video reaches to many subscribers and also our channel reaches to many subscribers. And don't forget to subscribe to my channel. So let's jump into today's video, but before that I want to show you what Nifty is doing, and I've been posting my analysis about Nifty and why I feel a bottom is in place, why Dow Jones has made a bottom in place. So if you haven't also checked my Twitter channel, go ahead and check it out. All the links should be available in the descriptions. So first, today I want to discuss about Nifty, and my opinion is that Nifty has probably made a significant bottom, and at least for the next short term, probably next few months, I think we might go and face sideways market, but I don't think we'll make we'll break that significant support. So let's take a look at Nifty chart today before we look at other things. So Nifty, so overall, if you see, since that bottom we made in the month of March, just when the war started, we had a crazy crash, and then we went up and we again came down. Right now, I feel that this is a very significant bottom, just primarily because that we have this previous significant support level as well here, right? So if you see, we had almost June to July, almost 1.5 months, 2 months of support, sideways consolidation before we had a breakout. So again, Nifty is kind of taking support around those levels. So for me, that level is a very significant level now, and we also formed last week. We had kind of a very strong green candle. Again, this week we seen a very good green candle. So overall, for me, this market, especially the Nifty and also the Dow Jones, US markets have made a potential bottom. And also I shared a view on small cap index as well, because most of us trade the small and mid caps. So I'll just quickly show you that as well. And I feel this index also has made a significant bottom. So if you look at the daily charts here, I did post this sometime back on Twitter a couple of days back. Now we've made a significant bottom here, and we also kind of not close below that swing low which we had on the 12th of May. So mid cap has not fallen as strong as small cap, because obviously small cap is much riskier. But on the mid cap, if you observe this here, the support here, we've had a very significant support, and we kind of held on to the support and we're heading higher. Again, at least for now, we're not broken that. So for me, that's a very significant level on the mid cap index. So overall, for me, both the stocks, both indices, small cap and mid cap, have made a significant bottom. And from here, I see some stocks might rally and do well in the coming days, and we might see some really good returns in some of the stocks. So you have to be very selective. Don't buy stocks which have fallen 50-60% and you're trying to bottom fish. That's not, if you want to trade momentum, that's not how you do it. If you're probably a fundamental investor and if you think the stock is fundamentally really good, then it makes sense, but not from a momentum perspective. So with that in mind, I'm going to talk about those two stocks today. The first stock I'm going to talk about is Granules. Okay, so Granules as a stock has been going sideways since quite some time, and I feel that we are towards the end of this correction for Granules, and I'm going to show you why. Okay, so this is the long-term price behavior or the price moves of Granules. So since the listing, since July 2001, we had a very strong horizontal breakout here. Now, in case you've not seen my horizontal breakout strategy, it's a beautiful strategy, a very simple strategy that you could use to make some significant returns. And this stock, the link would be in the description above, so just check it out. And in this, you see a similar kind of breakout we had here, and we had a retest towards that channel there, and then we had a very significant move. Again, a very strong consolidation for almost 5 years, and again we had a breakout, and again we retested the channel. So for me, this channel now becomes very significant because we've had already one major touch point there, the second major touch point, third major touch point, and if you look at this month's candle, we are forming a very strong wick over here. And already if you look at the previous wicks over there, we are seeing demand coming around these levels. So every time the price tries to go down, it tries to come back again to the end of the month, and again we try to go down, and we are not even going to close below this month, right? And if you look at the weekly charts, we did have a very strong candle in the last week of May, right? So that signifies some really good volumes coming in there, and that signifies some really good bottom there. And for me, I think the Granules is kind of making a significant bottom here, and all I need is a confirmation of this bottom would be about 320 levels. But then by then you buy 320, it's already some significant gains at losing, and that's why I'm trying to catch this bottom over here. Right now, remember, catching bottoms is a good thing if you're catching them around significant support zones or significant channel support zones. Otherwise, I would not recommend, if you don't know how to catch it, I would not recommend doing that. Now, just looking at the daily chart here, if you've seen a significant move up, and then we had a drop, and again we're kind of moving up. The volumes have been pretty good. For me, this has been a one-way fall down, and now we might go sideways for a few weeks, or probably a couple of months as well before we completely head higher. So for me, right now, Granules is a very good pick, especially if you're a fundamental investor. This is how you catch, stocks around those zones with minimal risk. So right now, for me, the stop loss is going to be, around that 232 levels. So if you look at from that zone, let's say you're entering around 270 levels. So for me, the stop loss is going to be around 12-13%, and we're going to look at all-time highs, which is a very good, risk reward from my perspective. So stop loss. First, always fix your stop loss. Never ever look for targets first. First, see what is the stop loss here. Stop loss is 232 at 267. So that's around 30 point stop, 35 point stop, or a 13% stop loss. So let's keep that in mind. Stop loss of 230 levels. We're going to buy at current market price around 267, 270 levels, and we're going to look for targets of minimum target of first is around this zone, which is 360 levels. That's almost 100 point stop, 100 point target, and then we're going to look at targets of 430 and even higher levels, right? But overall, for me, once we break out this this falling trend line there, then we're going to look for much higher targets, probably even to the upper end of the channel in the coming years. So upper end of the channel would mean probably levels of 1,000 also in the next 5-10 years. We never know, but for me right now, if you're a fundamental investor, it's a very good time to invest in this stock. So that's the first thing I wanted to cover, the technical analysis of Granules. Now let's look at the fundamentals of Granules. Here, and fundamentals always is a good thing to look at, because you want to look at stocks which are available, which are growing significantly, which are making some decent profits, decent revenue, and you want to see some growth in that profit and sales. The reason why I'm saying growth is you can expect only stocks which are growing really significant to give some really good returns. Stocks which don't grow much, or which are very erratic in their profits and revenue, might not give you. It might be a cyclical stock, but if you want to look at long-term growth stocks, these are kind of stocks that I will look at. So let's look at the fundamentals and why I think that Granules is probably a good company. So it is a pretty mid-cap. It's probably a mid-cap company, trading at 16 ROC, 17 PE. So overall, for me, the valuations look decent. It did have a decent sales growth, in fact, a fat sales growth, but we look at the numbers shortly. So this is a pharma company, as I mentioned, and historically, if you look at the PE ratio, we've been trading historically around, during the after the COVID crash, we're trading at 626 PE, and right now we're trading at almost a 17 PE, right? Whereas the EPS has kind of gone up, and we're kind of stabilizing around those zones, right? Now looking at the month on quarterly charts, quarterly results, you see we've had one of the highest quarter results in March and December, with almost not very great PAT like we had in December 2020, but I think we have bottomed around the 13%. So OPMs kind of have bottomed out, and I feel this might increase and we might stabilize around the 25%, 28% levels. So for me, that's a pretty decent growth in sales. Okay, not a great growth in profits, but that's for me a decent growth in profits. And sales have gone up. It's been growing since 18. If you see, we've been growing very fast, and we've had some decent PAT also of late. And it has taken some debt there, but not pretty significant. It has some decent reserves, so that's why I say it's not significant debt. And overall, the promoters hold a 41% stake, 42% stake. The FIs have reduced stake, DIs have increased stake. So for me, overall, not positive, not negative, but there's nothing to worry about from a fundamental perspective. So yeah, so given that the sales is growing, I think it has bottomed in terms of operating margins, and for me the technicals are looking good. So from that perspective, this looks like a good fundamental bet. Do let me know, a lot of you might have already invested in Granules, just after the COVID crash, or caught it around the top. So do let me know your comments on how you think that Granules might be a good investment, in the coming days. So Now, before we jump into the next pharma stock, I want to show you what the pharma sector itself is doing, because the pharma sector also, as the index itself is looking good, and I feel index also has kind of bottomed out and we might head higher soon. So let's take a look at the pharma index before we look into the second stock. Do stay till the end of the video to know the second stock as well. Yeah, so this is the pharma stock, and this, if you see, is the monthly charts, right? So overall, we have been trading in a pretty good long-term channel. So if you connect that dot over there and you just drag it there, and you connect that point, you see that we've been trading in a long-term channel, having resistance around the middle of the channel. We had resistance again there. We had a breakout. We went all the way to the upper end of the channel. We came down, retested. We had a very significant 5 years correction, and then again we're facing resistance around that middle of the channel, right? So for me, overall, the sector has been going sideways, but what I've been observing of late is this support, right? So you might call it inverted head and shoulders here, but I would not call it inverted head and shoulders for now. Unless it doesn't break here, I would not be really bothered about it. For now, for me, this looks, all those candles around that support zone for me looks very bullish, and also last 3 weeks looks very bullish. We might consolidate for a few more weeks, but I think a bottom is forming, in the pharma stocks, and we might head higher again. Probably in the next couple of months, we might head higher again. So it's time to accumulate pharma stocks in case you haven't. That's the reason why I think pharma sector is kind of bottoming out, right? We might have a breakout somewhere, probably another 1 month or 2 months, we might have a breakout around that levels. So for me, the confirmation of breakout would be around 14,000 levels is when, I might really say that this sector is now bottomed out. Definitely, until 14,000 is not taken out, I might still, be on the sidelines, keep watching, keep accumulating with a stop loss, around 12,200 levels. Okay, so that's my take on the pharma index. And again, a lot of you might be saying pharma, has not been doing well and all that. Technicals can help you definitely catch pharma, stocks and indices at right levels. So, but you need to put some effort to learn technicals. So let's look at the second stock. I've wasted a lot of time already. Let's look at the second stock, which is Biocon today. Now, Biocon fundamentally has not done much. The growth has not been great in the past many quarters, but the last 2 quarters definitely have been looking very good for me. And that's why I'm looking at fundamentals, fundamentally, I'm looking at Biocon today. But technically also the stock is trading at a channel just like how we saw in granules. So for me, both fundamentally in the last 2 quarters, sales has been growing very well. Technically, it is available near to channel support, and that's why I'm looking at that Biocon today. So as usual, let's look at the technicals first. Quickly, always do a monthly, multi-time frame analysis, like always said. I also posted a Twitter thread on Twitter about Nestle, how I did multi-time frame analysis for, Nestle. So looking at Biocon, I'm just going to connect the bottom. I'm just going to touch that point here, and if you see, automatically it touches the point there as well, right? So for me, we are right at the cusp probably of of the end of the correction for Biocon. Probably another 1 or 2 months, 1 or 2 weeks, I don't know. But right now, if I connect that dot over there, we are right at the edge of the channel of Biocon. And also, if you see, compared to this highs, we are taking support around those levels. So as I said, stocks, sometimes in the breakout, they kind of take support and then they head higher. We saw that in the granular chart. I showed you how it formed a bottom. And also here, you can see that horizontal strategy, which I just mentioned before. You can see how stocks break out, kind of retest around zone, and we kind of head higher again. So I think it's doing a similar kind of a pattern here. We kind of, had a breakout, we are retesting, and we might head higher soon, but I'm not sure exactly when. But the risk reward right now is very much in our favor. Probably the 10% stop, you can look at, returns of 100% probably in the next couple of years, right? And that's why I'm looking at Biocon. So overall, in the long-term channel, I'm looking at the weekly charts now. The weekly charts, if you see, we are forming a clear base, here, right? So we have tried to go down, since the month of, August last year. The stock has been trying to go down, but the stock is not going down, right? We had a breakout there. I'm kind of taking support around those levels. So for me, overall, this stock looks, definitely it is bearish rightly at this point. It's going sideways. I don't say bearish, it's basically going sideways. And for me, once we cross that levels of 380, 390 levels, we're going to see some really good momentum here in the stock. But right now, what I would do is, take a position right now at this current market price. If you look at here, we're also forming a nice base over there. So for now, I would buy the stock at current market price. It's around 333 right now, 333 levels. Keep a stop, around 300 levels, right? So that's a 10% stop. 333, 300 stop. If you're aggressive, you can keep a stop even at 315 levels, which is the lowest point of here, or even here around 370 levels, right? But I keep a stop at 300 and buy at 333. It's a 10% stop. It's a very, very small stop for me. and you can look at probably targets of going to monthly charts to show you the targets. I'm going to look at first target of 470 levels. So that itself shows that's 140 point reward for just a 10 point stop, 30 point stop, right? So it's almost 1:5 risk reward. But what I'm looking for is that channel target, which is much higher in my opinion. So we might go ahead and in the next 5-10 years we might head towards levels of 900 levels. So with a 10% stop, you're looking at targets of almost 3x from here. So 900 is my target around the top channel in the next 5-10 years. But for short-term targets, as I said, 470 is a short-term target. But if you have patience, keep that stop loss at 300 and just let it go and invest 5% of your portfolio and see where it heads to. So that's the technical analysis of Biocon. I'm sure a lot of you would be thinking 900 is too much of a target, will it really come? I can show you a lot of examples where channels work beautifully. We've had many posts in my Twitter. We've seen Neuland, Balaji Mines, so many stocks, channels are doing well. ITC, I recently posted around 180, 190 levels. And today we are at 240 levels or even much higher, right? We are looking at 260 to 300 levels also might come, and overall target 5 to 600. So channels do work. It's up to you how you want to trade them, how you want to invest in them. But let's take a look at the fundamentals of Biocon and let's see what Biocon has in store. So Biocon fundamentals are not great, as I said. ROC is pretty low, whereas PE is around 55 levels. But keeping that aside, what I'm noticing is that the PE might catch up, the earnings might catch up soon. We are seeing the last 2 quarters, we've seen a bump in the EPS. I'll show you the quarter results. So if you look at the last 2 quarters, we've seen a decent growth in terms of the overall revenue, right? And even if you look at the sales here, we've hit all-time high sales, profits, PAT, right? 239. We've not seen that in the last many quarters. And for me, overall, I think this looks very good from a fundamental perspective. Sales has crossed 2,400. That's a very good growth compared to the last year. Even compared December to December, even if you see quarter on quarter, everything has been excellent. So we've been doing around 700 crore mark, but last 2 quarters have been very well, right? So that's some kind of a trigger probably for the stock to move ahead. The stock might not be doing well because of the bear market. If the markets were good, probably it would have done very, very well, right? Also here, if you see, we've seen some decent growth and profits have not been great. We had really good margins at 25% in 2019. We had 2011, 12 also, we had some really good margins, but that margin has not hit already. Probably we're heading there, in the next few years. We don't know what the company is doing in terms of strategy, but we are heading there probably in the coming months. So the worrying thing for me is the debt. They have increased the debt of late pretty significantly. Maybe that's to expand. I don't know. Do let me know in the comments if you don't know why this company has been taking so much of debt. But for me, overall, this stock is pretty good. Even in terms of the shareholding pattern, they're okay. Public has been reducing. DI has increased stake. FIs have been pretty stagnant around 16%. So overall, nothing to worry from that perspective as well. So for me, Biocon and Granules, both look from a fundamental perspective, especially for value investor. These are the points that you have to buy and not buy at previously in the last many months. Buy them around the channel support. You might find them really, valuable buy points with a small risk but a significant reward. And I'm sure you enjoyed this video. If you did like this video, do let me know in the comments as well. And don't forget to like and subscribe to my channel. I'll see you in another video. Take care, stay safe and trade safe. Keep risk management in check and you'll do well for yourself. Okay, bye-bye. I'll see you in another video. Take care.